Hey, my name's James Nicholson. Welcome to my YouTube channel. If you're a buy-to-let investor, or maybe you want to be a buy-to-let investor, I've got some good news on interest rates for you in this video. Now, normally when we talk about interest rates, they're for residential mortgages. We talk about the usual suspects, HSBC, Virgin, NatWest, Barclays, and these types of people. But a lot of the buy-to-let products are from brands that maybe you've not heard of. And this lender is a very big lender, probably the biggest in the buy-to-let market, and they've just done some really good improvements to their rates today, as much as 0.4% down. Now, if you're on an interest-only mortgage, that's nearly 0.5%. That makes a big difference to your monthly payments. It may mean that your deal suddenly stacks up when it didn't on the old rates. So let's talk about that. We'll dissect some 2-year rates, some 5-year rates, and a lot more in between. While you're here, if you haven't done already, do make sure you subscribe to the channel and hit the bell notification. And lots of you do get upset about this, but I'm going to ask anyway. Smash the like button, tickle the like button, do something to the like button, guys, because that really helps us with the YouTube algorithm. That's why we ask you to do it. So do it right now. It can't kill you. So the Mortgage Works is part of Nationwide. You might not know that. And so Nationwide is a huge lender, but you don't normally borrow from Nationwide. They do a lot of little sub-brands and stuff like that, like insurance companies do. And so the Mortgage Works, if you look on a price comparison site, will always be one of the better deals on the market. And this week, they've actually dropped their rates significantly. So we're talking about as much as 0.4% down. That's nearly 0.5% down. That makes a big difference, because when you're a buy-to-let investor, you pay what we call interest only, and you're way more hit by interest rate increases or decreases than a residential mortgage. It makes a big difference. So let's look at the rates, and maybe this is a rate that finally you might have been waiting for and you're going to jump in. Now, these rates are for purchases and remortgages, just to be clear. So they're good for both. And so what have we got here? So we've got rates from as little as 4.19%. We're getting close to that, for sub 4%. So this is a 2-year rate. This is the first rate I want to talk about. So 2 years, and the rate is 4.19%, which is good. The fee is pretty high. It's 3% fee. And you've got to have equity of 35%. So it's 65% loan to value. That's 65 LTV there. That's not a bad rate. Now, some of you are going to say that fee is really high, but take this into account. If you went with another lender at 6%, you'd actually pay more in 2 years than you would with this deal. And that fee, as with most mortgages, can go on to the borrowing. So you don't physically pay it, and in 2 years, you can work it out then. So I think that's a good deal. I'm pretty happy with that deal. It's getting very close to the under 4%, which is what we want to see. Now, this works for a lot of buy-to-let people, because maybe you were on a 2% rate, which a lot of people were. Good rates were around 2%. I had a lot on 2%. I've got one on 1%. Let's just say it was on 2%. And that means that when you do this deal, your payments will double. Now, that sounds horrendous when you say it like that. Your payments will double, but there are landlords that had to take deals in these high interest rate times when it was over 6.5%, that their payments went up 4 times or triple. That was very common as well. So to get just double the payments is good, right? And your rent should have gone up in that time as well to hopefully counter that. Now, they've got another 2-year deal here, which is slightly more expensive. And that's at 4.39%. It's got a 3% fee again, but this is more of a traditional buy-to-let, because they'll give you 75% loan to value. Normal standard buy-to-let. New purchases at 4.39%, I'll take that. And new deals stack up really well because when you're buying, you present to the seller, look, the price has got to be this, or the deal doesn't stack up. It's the remortgages and the old deals that have been the hard ones for a lot of landlords during these uncertain times and the prices going up with the interest rates. So that's a not bad deal. And so we're getting closer to that sub 4%. I reckon you'll see that by January or February. But right now, that could get you some deals. Next, and the last deal I want to talk about that they've got is their 5-year deal. So the 5-year deal, the interest rate is 4.54%. The fee is 3%. And this is on a 75% loan to value. Now, often with a 5-year deal, they'll give you the 75% loan to value quite easily because that's such a long period of time. They expect the market, if it did go down, to have some sort of recovery in that time as well. So all these deals are with brokers right now. So Mortgage Works. Now, I don't think there's going to be any other movement before Christmas now. And what I've been reading in the last few days is that a lot of people feel that just early in January, you won't get much drops in the mortgages. And the reason for that is the market starts kicking back into action. And so they're going to get business anyway. And so they don't have to be so competitive early January. But as it gets to the end of January and February, as long as inflation's moving in the right direction, which I use a website called Trueflation, and Trueflation says that the inflation at the moment is at 3.9%. Let's see next week if that's what we actually get it announced at. Trueflation has been fairly accurate over the time that I've been looking at it anyway. And so as long as we keep the Bank of England holding, the inflation dropping, then you will start to see some better rates. But these are good deals right now. You can find some very good deals in the market now, people that just need to sell. There's not loads of them, but there is some of them, which there wasn't for a few years. So let me know what you think about this rate. Do you agree that we're moving in the right direction? Do comment below. Let's get some more people aware of this content. How do you do that? Well, you do what we said earlier. Smash that like button, guys. That really helps us with everything on this channel. And do go and check out some other content on the channel. We've got loads of content now. I've made nearly 600, actually more than 600 videos. So you can learn about property investment. You can know what's going on in the market. So go and check out all the other content on the channel. Maybe start with this video right here.